A very good day to all our viewers who've tuned in to this live broadcast on Moneycontrol. You're watching Earnings Express with me, Stacy Pereira, and the stage is pretty much set. We've seen globally the US banks have come out with some numbers over last week, but for the banking sector here in India, we have HDFC Bank, which is among the biggest private lender, who will put out its numbers today. And what are we looking at? We have a little bit of maybe a surprise that we could see. If you look at the NII or the net interest income, we are likely to see about a 5% growth sequentially when it comes to NIIs, whereas profits, that one might see some bit of a dent. We're looking at a number rather flat, we would say. If you look at the average of what the brokerages have put out, a number of close to 15,910 crore rupees is what we're looking at the Q3 PAT number to be, and a high deposit rate is what we are seeing, and that is likely to have really cut short or hit the margins as well. But on the other side, you do have a better asset quality, and that has remained quite stable over the few quarters in the past as well. So brokerages coming out with what they are likely to expect, and which is what we're going to break down in detail. And joining me to do that is Gaurang Shah. He's the Senior Vice President at Geojit Financial, as well as Sandip Agarwal, a Fund Manager at Sowilo Investment Managers. Good day, gentlemen, and thanks so much for joining us here live. Like I was just pointing out, now HDFC Bank pretty much is the one that will set the tone for the private banking space, at least right now. So we need to understand a couple of the numbers and couple of the factors. Now, over time, we've seen asset quality for pretty much most of the banks remain quite stable, and so will be the case for HDFC Bank as well. But on the other side, the pressure is really on the margins. Now, previous few quarters as well, we didn't see much moving in terms of margins for private sector banks. Is this likely to continue for HDFC specifically at this point? Gaurang, you can take that one.
Sure. Thank you for having me on the show, Stacy. And pretty much so with what you said. I think cost of funds is possibly not dent the margins, but there might be a lower number over there. As far as the gross and the net NPAs are concerned, well, historically speaking, HDFC Bank has delivered better numbers compared to the industry standards. And of course, not to forget, Stacy, the numbers are going to be post the merger. We've seen one quarter. This is the second quarter, if I'm not mistaken.
Right.
It's work in process, but since we are speaking about HDFC Bank, I think it'll be prudent on my part to give a disclosure. We have a positive coverage on the fundamental side, the buy side, that is on HDFC Bank. Whatever numbers we've seen up till now, Stacy, the targets which we had set for HDFC Bank is about 2,000 rupees. You were absolutely right. One of the sideways performers, HDFC Bank in the private sector bank compared to the other large or mid-cap banks. But, if you have to go by the verbatim which was given by some of the NBFCs and bank management as far as the advances, deposits, CASA ratio, as well as loan book growth is concerned, the commentary is very, very strong. And we are extremely excited about the credit demand which is there in India and which is going to last for a pretty long period of time. So there's going to be plenty of opportunity for growth for strong banks which are able to manage their cost of funds and cost of lending, and at the same time, of course, keeping the asset quality quite strong.
Right. So, Sandip, would you then concur and say that, despite those rising costs in deposit across the banking industry, HDFC Bank will still then, have that cushion to its margin because of the liquidity in terms of now with the merger, already taken place? Would that be a good assessment?
Yeah, I broadly agree with what Gaurang and what you have already said. But my only thing is that, we are seeing that this year they will have 35,000 crore of borrowing of HDFC Limited, which will come for renewal. So either they have to mobilize deposits little faster, or, it has to go for renewal or further again reborrow. And so that is one area where, cost of fund can slightly increase. Otherwise, I think, the private banks have done so far good job, and I don't see any negative surprise on the credit cost side. I don't see any risk on the delinquency side. But yes, deposit mobilization has to be little faster to, cater to the very high credit growth which is there. There is still gap between credit growth and deposit growth, and I think that gap needs to be filled by higher deposit mobilization.
Right, Gaurang, but what we have to do factor in the unsecured and the retail loan part. We have heard from the RBI also coming in and taking those steps. Just today, again, yesterday, there are new draft rules that have come out for NFIs. So how is this really going to play out in the larger scheme of things? We're not looking at just the numbers, but of course, for a bank as the stature of HDFC, it might not have that much of trouble. But we did see other banks like Kotak also, which actually had that number quite high. So how is one supposed to be treading, and what is one supposed to be looking out for when it comes to these numbers when they do put them out?
So, Stacy, let's understand first thing. Why did RBI step in and raise the margins as far as the unsecured loans are concerned? Because there was quite evidence was there that there was little bit of lethargic approach as far as unsecured loans doled out were concerned. I was reading a report, to be very frank with you, that the large part of these loans which were given in form of unsecured loans were given to those people who had already 2 loans outstanding. So to rein in any kind of larger issue unfolding which might have a domino effect, and let's face it, I mean, I think banking and finance cannot afford to have any kind of lapses as far as unsecured loans are concerned. So it was, and in 2019 itself, I think the margins were up to about 125%. Then it was brought down because of the pandemic, and now that there was certain evidence of risk profiling not been done properly, the RBI has stepped in again to possibly get things right before anything gets out of control. So it's not going to be anything major for larger players, if you will, or even the mid-sized banks, but more so for those entities which have a large exposure towards this particular book. So I don't think that that's going to be any kind of serious significance as far as earnings are concerned for large or mid players where we have coverage.
Right. Let's look at the advances then, and that number, particularly for HDFC, is at least looking quite bright. We're seeing a 62% uptick, perhaps in if you have to look at just this quarter in the advances. So, can we expect better credit, especially now that we're getting into an election here as well? Are we going to see that credit cycle really take off from here, Sandip?
Yes, I think credit cycle is definitely looking strong, and we do expect that, with we are hearing a lot of private capex and also momentum in the economy. So I think, yes, it is ripe for a good takeoff, and we expect same for all the private banks.
Right. Okay, let's talk about the stock now then, and maybe Gaurang can throw more perspective on this, because if you just look at HDFC, particularly in the last year, it was quite that underperformer. Of course, there were all those hiccups, people waiting and watching to see how the merger really plays out, and there were concerns regarding that borrowings that would come into their books and all of that, but it managed in the last month, at least in December alone, it saw like a good 12% rally, and pretty much outweighing then even the Nifty bank index for that matter. So how should one be looking at the stock, and what are the positions one could take? Is there more steam, or can we actually see this go further up? One should wait and watch. What would be your play?
So, like I said, Stacy, we have positive coverage, and whatever numbers we've seen up till now, we have set targets of 2,000 rupees on HDFC Bank. Today, I believe the numbers will tell us a better story in case if we have to revisit the targets upwards or maybe keep it at 2,000 levels. And let's face it, I think, all of us on the street were excited when the merger was going through as far as HDFC Limited and HDFC Bank was concerned. Post the merger, I think some brokerage house or institution came out with a sell recommendation with concerns on margin front. And this was known to us. I mean, that was something not that was new. So my sense is that, and like Sandip was mentioning, and I also referred to the credit demand, which is likely to take the loan book to a different level altogether, along with the asset quality improvement. So my sense is that though it was a sideways to underperformer, I think things are now going at the back burner, and we should see some performance to come through, and numbers should increase and be more positive from the fourth quarter in the next financial year, wherein we'll see credit demand pick up to a great extent.
Right, Sandip, what would be your take when it comes to at least private sector banks as a whole? Of course, their stock performances too, and how would you put them in a pecking order?
So, we run a PMS on our clients and we hold positions in some of the stocks. So, it will be unfair to comment on a specific name. But let me put it this way that, I think right now there is slight advantage to PSU banks still because, their deposit growths are slightly better. They have slightly better reserves. And also, their NPA benefits, recovery benefits are still there. So, they may still post a higher profit growth and margin expansion versus private banks. And I think this advantage will continue for another 2 quarters. And post that, I think everyone will come on similar plate. So till that time, I think, we may see PSUs doing slightly better than private. But having said so, we are going to, what we believe is that, next 4-5 years will be great for Indian economy and banking sector. So, these large banks, HDFC, ICICI, Axis, all will benefit in a big way. So for a long-term investor, I think private sector banks offers very good value at current valuations.
Right. What about if you have to take this discussion further and, just talk about private versus PSU? Gaurang, would you also agree that there is more value in the PSUs and private banks have already hit those highs?
Well, Stacy, to be very honest, I think private banks have been outperforming. There is no doubt about it over the last couple of quarters when you compare public sector bank and private sector banks. But my sense is that public sector banks' balance sheet have become more cleaner, leaner, and stronger, especially post the entire merger process that we saw and consolidation that we saw in public sector banks. So we are positive on private sector banks, and we have also got some coverage in the public sector bank universe. Names like State Bank of India, Bank of Baroda, Canara Bank, PNB, Bank of India, to name a few. And I think there's going to be a catch up, and that gap between private and public is going to get narrowed.
Right. Okay. To both of you all quickly, then what would be the one thing that you'll be looking out for from the commentary from the management? The earnings should come anytime later today. So what would be that one thing that one should be watching out for when it comes to HDFC Bank's management and their commentary? Maybe Gaurang, go first.
So again, outlook as far as the growth is concerned, and of course, post-merger, how things have panned out, Stacy. I think that's going to be my core focus, and possibly how they are going to take care of the borrowing cost to make the margins better in terms of profitability. These are some 2-3 things that I'll be keenly watching.
Right, Sandip, anything different for you that one needs to be particularly looking out for when it comes to HDFC Bank?
I think Gaurang covered all of them, so nothing to add. But yes, deposit mobilization is also something which is very important, and other things Gaurang has also well covered already.
Right. So, thank you so much, gentlemen, both Gaurang Shah of Geojit Financial Services as well as Sandip of Sowilo Investment Managers. Thank you both for giving us your time and getting us some sense of what we can be looking out for when it comes to HDFC's Q3 numbers. We are expecting them later today, and tomorrow we'll have a better coverage on breaking down those numbers once they're out for us. For all of those else who've tuned in, thanks so much for watching.